Over $150 billion. That's the staggering estimated value of the global gaming modding community, an ecosystem suddenly facing existential threats. This week, Minecraft's creator, Marcus Notch Persson, ignited a firestorm, directly challenging the ESA's stance on private servers and signaling a potential gold rush for adaptable platforms. As the gaming industry's largest trade association, the ESA's assertion that private servers are illegal has left many in the modding community scrambling for answers. The ESA's stance is particularly concerning for large private servers like Mineplex, which boasts over 10 million registered users and supports thousands of content creators. In contrast, the popular server Hypixel generates an estimated $10 million in revenue annually from its custom game modes and minigames. The dispute centers on the ESA's recent public statements, implicitly categorizing many fan-run private game servers as illegal operations. These servers, often built by dedicated communities, offer custom experiences, new gameplay modes, and a longevity official servers rarely match. They are, in essence, the lifeblood of extended game engagement, fostering immense loyalty and innovation far beyond initial release. Notch's intervention isn't just a nostalgic developer weighing in. It's a direct challenge to a powerful industry lobby, potentially reshaping the future of user-generated content and digital ownership in gaming. For years, these grassroots communities have been significant value drivers, extending game lifespans and fostering immense loyalty, a fact many publishers have quietly embraced. This isn't just about Minecraft. It's a proxy battle for the entire gaming industry's approach to community-driven innovation and intellectual property. The stakes are incredibly high for platform owners, independent developers, and millions of players globally. Recent analysis from Gartner projects the user-generated content market within gaming could soar to nearly $250 billion by 2030, largely driven by these very private server communities. Bloomberg Intelligence reported last quarter that companies actively fostering modding, like Take-Two Interactive with its Grand Theft Auto V modding scene, consistently see higher player retention rates and extended revenue cycles. What's wild about this is the economic ripple effect. Third-party developers, hosting providers, and content creators have built multi-million-dollar businesses entirely around these unofficial ecosystems. McKinsey's latest report on digital economies highlights that platforms embracing an open-source or community-driven model often outperform competitors in terms of user engagement by as much as 3x. The data reveals a darker side. Legal ambiguity has stifled major investment, leaving billions on the table because investors are wary of regulatory crackdowns. This is what most investors missed: the untapped potential, waiting for a clear legal framework. Whoever spots this regulatory gap as an opportunity stands to capture immense value. Here's what nobody mentions in the mainstream gaming press. The real opportunity isn't just defending existing private servers, but legitimizing and monetizing them. Imagine a future where game publishers license community-driven servers, offering tools and support for a revenue share, transforming a legal gray area into a multi-billion-dollar revenue stream. This isn't just about IP. It's about shifting from a gatekeeper mentality to a facilitator role, unlocking unprecedented creativity and economic growth. Whoever spots this trend early and develops legal frameworks or technological solutions to bridge this divide will capture immense value. Conditions needed to win involve clear licensing models, robust moderation tools, and a willingness from publishers to truly partner with their most dedicated fans. For investors, this signals a rare chance to back companies pioneering this new paradigm, from legal tech startups to platforms building new economic models for digital communities. Don't miss out on gaming's next big economic shift. Subscribe now for exclusive insights into where the real money is moving. Over 60% of gaming analysts surveyed by Bloomberg Intelligence now view the ESA's stance as a significant miscalculation, potentially stifling a burgeoning ancillary market. Firms like Wedbush Securities highlight a substantial risk to publisher goodwill, estimating a potential 15% dip in player engagement for titles with restrictive modding policies. However, this creates a vacuum. Smaller, agile developers are seizing the moment. doubling down on mod-friendly ecosystems and open APIs. That's a direct play for market share from disillusioned players. Conditions for success demand clear communication and robust support for creators, rather than litigation. Wall Street is watching closely. Companies embracing this shift could see investor confidence surge, while those clinging to old paradigms face a long, tough road. Across Europe, regulatory bodies are already examining the implications of such copyright interpretations on digital consumer rights. The European Commission's Digital Markets Act, for instance, could offer new protections for user-generated content platforms, potentially challenging the ESA's narrative on a continental scale. We're seeing a surge in venture capital flowing into game development studios, prioritizing player freedom and interoperability in emerging markets like Southeast Asia. Countries like South Korea, with robust esports infrastructure, recognize the economic upside of an empowered modding scene, fostering environments where innovation thrives. Investors here need to spot companies actively lobbying for more open digital ecosystems, as they're positioned for long-term geopolitical advantage against protectionist incumbents. Remember the early 2000s music industry's war on file sharing? That's a stark parallel. Instead of embracing new distribution models, major labels fought tooth and nail, leading to a decade of declining revenue and consumer alienation. Then came Spotify and Apple Music, demonstrating how embracing user behavior rather than combating it unlocks immense value. Gaming faces a similar crossroads. Companies like Valve, with its Steam Workshop, understood this early, integrating community content seamlessly and profiting immensely. Those that replicate the music industry's missteps risk becoming blockbuster in a Netflix world. The smart money is backing platforms that learn from history, fostering collaboration over confrontation to secure future market dominance. Initial estimates suggest independent game developers, particularly those leveraging decentralized autonomous organizations, stand to gain significant market share, potentially capturing 20% of the modding economy within 3 years. Major publishers resisting the trend, however, risk alienating their most dedicated player bases and developers. Unexpectedly, cloud infrastructure providers like AWS and Google Cloud could also face headwinds if stricter regulations reduce the demand for private server hosting. Conversely, companies specializing in digital rights management, solutions that facilitate community content rather than restrict it, are poised for explosive growth. This is about identifying the enablers of open ecosystems versus the enforcers of closed ones. Investors need to pick sides carefully for outsized returns.